The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 39 at 16,405 for my subscribers. We are watching this area very closely. Got a plan. Most important thing right now is you have to have a plan. What I've been looking at is through attrition. In other words, being stopped out for a gain or a loss. I want to be raising cash. I see little on the upside. I do see spikes, possibly a new high. But the distance to the upside, to the downside, is giving, at this point, much more preference to the downside into next week. So I think you've got to be very careful. Very, very careful. Raise cash. You don't have to be short. You can be raising cash. That's not to say that we aren't buying. We're buying stocks that have had fabulous moves that still look very good in the weekly and monthly charts, and have pulled back. We took gains, big gains. Now those are the stocks we'd like to get back into, or we have gotten back into. And basically the only way I can do this is to say to the market, hey, show me. We've given you plenty of opportunities to move to just a slightly higher, to an all-time high, where we can start making other judgments. Haven't done it, but you haven't really broken down. And I've made a big deal about what? I've made a big deal about the VIX index. Let me just show you the VIX index right here, VIX.X. Oh, incidentally, I had a question about, yes, that it was, in fact, my system. There was a conflict between some programs, which wasn't a problem before, became a problem. That part of it was my issue with my trade station yesterday, making it very, very slow. The other issue, which I'm really disappointed in, is that it seems I'm one of the very few people that has discussed typing in and getting the price moving. Let me see if I can do it right now. Let me just go. I can tell. I figured out today what it is. A, B, C minus. So I don't know if it's C minus yet. Why the type goes into the symbol bar. So I'm busy typing away, thinking I'm typing on the chart, and it wasn't. So that is an issue that hasn't been fixed. And also the issue that, and people let me know, send me an email, Basil Chapman at TFNN.com. I'd like to know if you have trade station, if you're having the problem. If I'm one of the only ones, boy, I don't know when they'll get to it, except I did tell them that there must have been tens and tens of thousands of people over the almost 11 years that I've been here at TFNN that have seen these charts, and therefore there must be hundreds of people that have seen, in many ways, how good TradeStation is, and have actually have TradeStation software, and in fact use TradeStation as their platform. So it's to their advantage to put me on the list, and believe me, I'll make a big deal about it. So let's thank you, Tom and Darryl, for a great hour before, and then the first hour at 9 o'clock, Steve Rhodes. We really got fabulous programming here. Let me just go back to this. The volatility index at 12.71, unless it screams into the high 14s, cannot see a sustained move to the downside. I just don't see how it can. It could be a one-day thing, but not a sustained move to the downside. Tossing this little sock that I have here in the air. That's number one. Number two, and I think this is even more important, you cannot get a sustained move unless you get bad news. The turns occur very often, as they did in 2000, January about the 14th or so. You can get a turn that starts very quietly. In fact, you get turns sometimes, major turns, where there's just good news. Why? Because there can't be any more good news. The good news is done. So I'm watching this really closely, and I'm saying I am not prepared to go heavily short. That's number one. I'm not prepared to go short an index unless there is proof of that selling. And that's what I've said to subscribers. So we should not be shorted. No one should be short of my opening call, any of the indexes right now, based on the criteria. Later in the day, certainly we might be. But we've got to give time to the level that I said is very important support. If that's broken and held, then I see absolutely no reason, at least starting off as a short-term trade, to go to the downside. Now, that's ironic. Why? Because some of our picks, which should have held very well, got taken out. Now, one was, I would like to say it's dumb, but I really thought I considered it very carefully, because the weekly and it was a shipper, and the weekly and monthly charts were building very nicely. They could still be building. I don't know what it was yesterday. Maybe it was a dividend. I didn't see anything. I searched and searched for news. We got in the other day in leg D in the Chapman wave. It went even higher after we got in. And then I said, we've got to be careful, because at peak D in the Chapman wave, that's where you can expect, that's the fourth highest peak, that's where you can expect a deeper pullback. But I thought I accounted for it. I took off the second trade on that position that we were going to have. I kept it just as one trade. And yesterday it went all the way down and took us out with a fairly, for us, a 7% stop is really wide. So it took us out, and it's acting kind of okay right now, not great. I'm just very disappointed. Let me put it this way. I guess I'm disappointed in myself, because I should have had the patience to say, it's in leg D. Let's wait for the pullback after peak D in the Chapman wave, because that's where you do get the sharpest pullback. And then just done something today. Instead, I didn't. And I'm a little upset. We do not take losses like that. Most of the time, we're looking at pretty nice gains. If we take a loss, it's really 1 to 2%, like we did the other day on that biotech that we went short. We actually went long a biotech yesterday. Took a whole 1 point profit on that. But I'm just seeing fewer and fewer upside possibilities. But at the same time, you've seen what's happened in this market. The buying gets curtailed, but so does the selling. Even today, look, down 32 in the down. Let's do the numbers. Dow's down 32 at 16,412. I'll do it live, because I think that Friday is great. Friday and Monday is where we can go into a little bit more detail with, that's interesting. I thought I solved the problem last night. We were up until very late with this computer. And that's interesting. All right, well, the Dow is closed above the 9-period exponential moving average every day since the December 18th breakout above the 9-period moving average. Today could be the first day that it breaks under it and closes under it. And I would have to suggest, if that's the case, I'm looking at a peak F instead of the peak C alternative. And that makes it absolutely, well, for sure, we will not get a new all-time high today. I can say that. 16,588.26 would be an all-time high. I see absolutely no way that we can do that unless there's some crazy news that comes out. So this is going to be a doji peak D in the weekly, and we're going into next week, halfway into the month, and that's halfway into the month with a peak D in the December high. And that makes January a possible peak D. No, leg D, December, possible peak D if there's no new high in January. So all of this is pointing to, there's a good chance that within another couple of hours, we will have started our very first short position of the index in quite a while. And we will start to add to it on Monday. That's just the way it's going to be. And if not, if it bounces above the 9-period moving average, it has a pretty decent day at the end. Doesn't have to be fantastic, just 16,403 in the Dow. Instead of breaking below yesterday's low of 16,378, instead it tries to rally a little later on. I don't know, we'll see. This is right now what you can call, with absolute certainty, a wishy-washy market with very limited upside, and is how the Dow is going to handle a break to the downside and then sustain it. And if the volatility index by the end of the day is up in the 1330s or higher, that's going to be pretty important. And then we'll start to hear the bad news. Now, the question was, bad news? What is bad news? Well, it's just fear of something. It could be fear of higher interest rates. Hey, look at this. I'll jump to it right now because it is so important. Look at this. This is the yield, my triple yield chart. I haven't shown my subscribers this week yet. I'll show it to them tomorrow. I want you to see where we closed today. Triple yield chart did a very unusual thing. It went to a C, and I'm not sure if that's really a G or a C in the 30-year yield, the weekly chart. It's a C, possibly in the 10-year, and it's an inside buy to a D because it went to a C and failed in the 5-year. I must tell you, the patterns that I'm looking at right here are very unusual patterns at new recovery highs in the yields. So I'm absolutely sure that I'm looking at something that's going on in the yield pattern. I'll look at the at US. No, here we are. This is T-bonds. Very sharp move to the upside. It's done that before and failed. That was on the 23rd of December. Spiked to 131 and 12/30 seconds of the continuous contract. But look at this. We've got the stochastics rising. The MACD's good. I still can only put a plus sign at the bottom here. That's peak A, and we're in leg B. And the weekly chart has improved. Now, I've looked at this pattern so many times. I'll do it again right there. And the reason why I've got this, my CD introducing the Chapman methodology up, is because of so many patterns that have made the left side to the right side test, some successfully, some unsuccessfully. This is successful so far, and it says, great. Now you can rally to the first peak on the left, which I mentioned before, 131, 12, and 12:30 seconds. That's in the continuous contract. I must talk about it in dates because that gets smoothed out. It's the date of the week of the 27th of December. If that's taken out, then the next level on the upside for bonds, that'll make it lower yields, will be the high of 130, the high of the 22nd of the week of the 22nd of November. You know, I have 131.27, but that does get smoothed out. And we go step by step. But what it does say is that there's really strong support at 129 and 8/30 seconds in the continuous contract. Let me just give you the USH, so we're talking apples to apples. This is leg B up. Leg B up. Also 41%-ish area in the stochastic. Leg B up, and the support will be quite strong at 121 and 12:30 seconds, but I wouldn't be surprised if 130 and 2:30 seconds to 129 and 30 seconds is really the near-term support. I'll be right back straight after these messages. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Isn't that interesting? Out of the blue last night, I came across DNB, Dun & Bradstreet. And it looked like a really good chart. And I said to myself, oh, man, you looked at this ages ago and you love the chart, DNB. And I wanted to do some work on it. And I said it should go higher, but we're not going to take any. I showed the chart and I said, we're just going to wait the day out. Let's just watch this. It's very important. Why? Because if it made a new high, I'm going to be calling it leg C, like a couple of things here. But it's a weekly that is in D, with a doji candle, and the monthly that's producing a doji candle. They do business information services, credit information, stuff like that. Great chart. MACD in the weekly and monthly, just fabulous. Stochastic at 92% in the weekly, 94% in the monthly, 82% in the daily. But the stochastic in the daily is 82%, and the MACD could have turned up, but it could also deflect lower, and that's what I'm watching closely from a cup formation. So out of the blue, I'm looking. I just wanted to check on. Sometimes I get emails, questions from listeners who would like very much to go through a particular chart, and lo and behold, it says Dun & Bradstreet, case 2770826. Dun & Bradstreet received the above referenced complaint from one of your customers regarding their dealings with you. Of course, it's just a scam. And isn't it funny that what a coincidence? I don't know. They just do this stuff. You get it all the time. I have absolutely no connection with Dun & Bradstreet whatsoever. Let me just get rid of that. You're out of there, mister. And then Lorraine asked me about the GDX and GDXJ. Yep, okay, I intended to go right there. So let me just go finish up with some of the numbers right now. And that was my Dun & Bradstreet coincidence. I looked at it, I thought, who, what? I didn't put it as a buy. Somebody saying, no. This is one of those scams. The gold contract, I'm going to do that right now. Why? Because bonds and gold are really very important right now, plus the dollar. I just wanted to show this chart right this moment to show, because we're getting there. The gold right now is up 14 at 12.43, and the dollar is down 37 cents. I just wanted to show this chart. I get this question very, very often. People ask me about certain indexes and the relationship that I often talk about. You know, for years I talked about the relationship of the inverse relationship, the mirror image of gold to the dollar. And you can see it beautifully here in this weekly chart. I think it's a weekly chart. Yeah, weekly chart. Look at that. This beautiful crossover. Look at that. From 2008, look at that rising red line, which is the GLD. Unbelievable, going all the way to the high of September, I think it was, September of 2011. And gold was going down to its low. That was in May, I think it was. Yeah, around about May of 2011. And then all of a sudden they went together in the same direction from May to the high of September of that year. And then what happened was, look, the patterns have been somewhat contradictory, but there's been a lot of parallel motion, especially lately. Now, if I expand this, you'll see that the GLD and the UUP, this is the dollar trading vehicle, like the SPY to the S&P, so it's an ETF. And now look at this. Right here, you had parallel motion. And all of a sudden, the dollar held better, is trying to rally, failed a little bit. Gold is trying to come off the base. Now let's get rid of this, because I just wanted to show that there are times, only times, it doesn't happen for a very long period, where gold and the dollar, in this case I use the UUP, can go in parallel motion. Number one. Number two is that in this whole divergence of craziness here, look at a chart with all the bad news that's going on of Carnival Cruise Line. It was popped up on CNN, so I quickly did. Going to an all-time high. No, to a recovery high at 40.60 right now. This is a possible leg E. I'm not calling it an A right now. In the monthly chart, the previous peak E was a pretty significant top in January of 2011. You wouldn't even be able to tell that they had all these massive accidents and things going on, and the all-time high was back at 58.44 in January of 2005. So what I want you to keep, I'm just going to constantly harp on the fact that there are stocks that are going to all-time highs right here, like that Dun & Bradstreet, or significant recovery highs after very sharp pullbacks. So this rotational aspect is so important. Look at the IBB, which is still, we got the break, huh? The IBB, which today made an all-time high. I've got it in leg C in the daily, leg D in the weekly, leg F/B in the monthly. I am convinced that it's when the IBB finally gives its sell signal, more like an intermediate term than just a brief pullback, that this market takes a 6 to 8 week breather. I'll be back at 877-927-6648. We'll look at gold.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back, and we're going to look at the GDX because that was a request by Lorraine. And we're going to go right to that one. That's an A to a B with the Chapman wave falling axe formation right there. What is the falling axe formation? Think of it just simply as two trend lines going down from the tops and then to much sharper lows. And if it breaks decisively above the trend line resistance, which would be around about the GDX is trading at 21.95. This is the, I believe, the Market Vectors Gold Miners ETF. And if it goes to 22.03, there's a real good chance that it'll start 22.24. It'll go to 22.25, which will be a leg C to the upside. If by the end of the day instead it starts to fall and it breaks under I don't think it's going to. I'm just saying this is what I'd be looking at. If it breaks under 21.68 for any reason, it's going to test 21.26. But the A, B, C, D, how many times have we seen this? Look at this. What's the premise of the Chapman wave methodology? It's to teach you how to find 4 higher peaks. And each higher peak is labeled alphabetically in sequence, peak A, peak B, peak C. And what happened is you've got A to B to C, and lo and behold, it makes the D, pulls back, and even in the 120-minute chart, you've got this declining trend line there, and actually it's more like a parallel one there, and that's a flag pattern, traditional analysis, technical analysis, and that should give you my way of looking at this is should give you a 1-to-1 extension to the upside, and that takes you to that base there, which is to the 2213 area. So we're looking at this and saying, hey, very nice action. The MACD and stochastic are turning up, but they haven't even given a confirmation yet of a buy mode in the a second buy mode in the 120-minute chart, and there is a gap. And the previous gap was mostly full, but not altogether filled. So we'll watch this very closely. It is good action on the GDX. So if you're in it, all I would say is that make some stop on your position, at least a partial stop, around about 2120, because the 2126 low of the 9th is very important of yesterday. Number one. Number two is the weekly chart. This is so early in the weekly chart. There is a positive divergence between the MACD and the price coming down. However, I have to emphasize that a flat MACD says there's a flat upside potential, meaning that there is upside potential, but it's kind of limited. You want to see that beta between the fast-moving average and the slow-moving average really start to expand in the weekly chart, closing nicely above the 9-period moving average, which is at right now 22.21, and the stochastic, which is at 13.96. There is nothing here. It hasn't even gone above 20% to give you a buy mode in that one indicator. So it's still just in a buy signal. And remember, I make a big deal. I introduced this a long time ago about the buy signal to a buy mode. I'm talking about over 10 years ago. It's specific to the Chapman wave methodology. So if you hear it used in a different context, treat it as if it's being used in a different context. Don't imply immediately that it's got anything to do with my work. Each person's work is separate. My buy signal to buy mode implies that you should go to at least a D in the upward trajectory of whatever time frame you're looking at, and it's based on a number of factors, but definitely the stochastic would have to be over 80%, or you need some very good technical indicators. So let's just go back to the GDXJ, which is the juniors, and this is the market vectors. I think it's just called the junior gold miners. Now, why have I lost all the notation on this? That is so frustrating. All right, doesn't matter. This one is trying to close above the weekly 9 EMA, which would be at 30, right there, 32.57-ish. It's trading right now at 32.30. Now, what's very important about the GDX, ooh, that's interesting. I think I mentioned this. 28.87 was the low over there, 28.87. And then you get another one right here, and then we'll go to our callers, 28.85. So that's low, and 28.82. Nice. I'm pleased I saw that. So there's 28.85 and then 28. So this is a brand new point. Buy signal going A to B in the juniors. If you're long, Lorraine, if you're long, I would put just some kind of a stop on a portion of your position if it closes underneath 31. 31.05 was the low of the 9th yesterday. So this is good action today. But the follow-through, until both of them go to leg C, and in this case it has to be about 33.40. 33.41 starts leg C. As soon as that happens, you've got a buy signal to a buy mode confirmation based on price. And that would take you to a target of 33.62. And then the candle right there of 34.93. So step by step, this is a daily chart, and the weekly chart is giving you nothing yet. It needs a really nice close today. I'm going to go to Brent in Martinez, California. Hi, Brent. How are you?
I'm doing great, Basil. I wanted to wish you a happy and healthy New Year.
And same to you. Thank you very much.
You're welcome. I'm calling about Google. I'm hoping you can give me your count for, I guess, daily, weekly, monthly. I got a feeling that you have a count and you have an alternate count, and that's the reason why you're not 100% sure about the top that was just made. Am I correct? I did, yeah. I have some puts, small position out to March, And so I just want to see what you, just get your opinion if I could.
So, folks, we're looking at Google. Remember the premise of the Chapman Wave methodology? I just wanted to show something here. Here's the CD. It's available at TFNN, Introducing the Chapman Wave methodology by Basil Chapman, chart analysis in the stock market. I have a whole series of things. This whole introduction takes section 1, Introducing the Chapman Wave methodology, basically teaches you. Look at this. You've got a chart right here. It's the blank chart. It tells you nothing. It's not even candlesticks. But as soon as you do this, whoops, as soon as you do this, highlight it. Now, and you put in your letters, you can go 4 peaks from the lowest, most obvious low bar, and it goes peak A, B, C, D, pulls back, starts a brand new A, B, C, D, and then in this case it goes to a spike of E to F. That's that old song that says suddenly goes to E and F. The bell rings so loud it can make you deaf. What you're going to do, which way to go? You sell at the high, then you buy at the low. But let's just go back to the thinking over here. From Google's doji low, right there at 842.98. I'm going to type that in. 842.98. I think that's what I said. You got a peak ABCD, and that did went to a doji top at 1,041.52 on October the 13th. It pulls back under that black line, that beautiful 9-period exponential moving average, and what does it do? It goes peak A, B, C, D again, and then it pulls back, and it pulls back with a stochastic of MACD pulling back, and it goes under the 9-period moving average for 1 bar, and then whoop, it closes above it, and it goes now. This is the question. It goes peak. I have it as it was E/A, F/B, and G/C at 1147.32. The on-balance volume reversed down sharply. The MACD is just about to cross down. The price at this level of 1142 saw the MACD lower than it was at the previous peak F top with the 1121 round number high, and the stochastic was lower. And the RSI is pulling back. I think you're in the right position, number one. Number two is what you really want to see so that there is no leg D up. And let me tell you, the market, the Dow's down 51, S&P's down 4. In this particular series of pullbacks, if this was the bear phase that was starting, we will close down today very sharply, triple-digit down, or minus 90 in the Dow. S&P should be higher than the Dow, so it should be not at 4.29, it should be at 6.70, maybe 7.05. So there's a little discrepancy there because there's been much greater strength in the S&P than the Dow. So if the Dow suddenly closes today minus 31, above 16,405, say, the S&P is only going to close down like 2.73. And I'm going to watch Google because these are our key indicators. These have been the heavies of the NASDAQ. I think this is going to be a peak D with a lower high bar next week in Google. And I can just tell you this, that if Google closes on any particular day below 1116, that's at 1124 right now, there's a real good chance it's going to test the 1104.93 low of the 3rd of January. It'll try to bounce, and that bounce will be so important in the weekly. The MACD has not yet even started to turn down. The stochastic's at 96%. So if this is just a sideways consolidation, then the 1105 level should hold over the next 5 to 7 trading days, and there should be a sideways motion. Should even get one attempt to spike towards the high. But my suspicion is that if you're out into March on those puts, I think you're going to do very well, because Google's a fantastic stock, fantastic long-term buy. It's one of the great stocks, like the General Motors of the 1930s. I suggest to you that the weekly chart, which made a leg E in January, is going to be the clue to whether there's a much deeper pullback. But at least for puts, I think you would, if you start to see a minus 30 from here, you'll start to do very nicely in those puts, and that's where you can start to handle it. So I'm looking at it and I'm saying a Dow, Google that closes under 1100 in the next even 5 sessions would be a clue to you that that was a peak G top, unusual peak G top in the Chapman Wave daily chart, and that Google is going to test. It could test if it becomes a more serious weekly chart and not just a sideways consolidation, 1,076 would be the number that I'd be looking for over a period of 6 weeks or so. But the speed with which you pull back from the all-time high 3 days ago to the lousy candle yesterday to the follow-through terrible candle so far today, it's only down 6, down 0.58%. 0.58 is nothing. But it's the candle itself challenging the 9 EMA. If it closes decisively under the 9 EMA at 120 today or Monday, then I think the downside is good. There'll be pop-ups to the upside, but the weight of evidence says that it could start to impact the weekly if that was to occur. I'm wrong. If by today there's a sudden reversal, Google closes at 11:28-ish, and on Monday it just has a pop-up to 11:33, then it's going to be more of a sideways move. But I think you're right. And looking at it in terms of the greater picture, I probably would like to be a buyer of Google on a pretty good turn down in the weekly and the monthly, but I would need 4 to 6 weeks of down move from the high of 3 days ago for me to consider it. If that happens, I think you're going to get a number of fantastic buys, but we'd have to wait a good month or two. So I hope that helps you.
It does very much. You have a great day and have a nice weekend. I'll talk to you soon, Basil.
Thank you very much. Don't forget, it's G/C in the daily, leg D in the weekly, leg E in the monthly. Thank you for calling, Brent.
Thank you.
Let's go to Mohammed in Glendale, California. Hi, Mohammed. How are you?
Fine, thank you. You're sounding good, Basil.
So I am really feeling good. I got a great bill of health from my surgeon Wednesday afternoon when my son took me. I wasn't allowed to drive all this time, and my son came up to help me because my wife was working, and I got a clean bill of health, so now I can go on to all the next steps. And what's even more important, I'm not a prisoner anymore. I can get in the car and drive.
That's wonderful.
It is. So you'd like to look at REG and Regeneron Pharmaceuticals. You know, this is almost like the Google of the biotechs, I think. I've got a peek. I'm not going to ask you what you're doing right now. I just want to do the analysis, and then let's get your opinion. I've got a peak E is made already 4 months ago in Regeneron. It was a spectacular stock that it went from back in July of 2010 in the 20 area to a spectacular 319.50. Wow. You know, the price increases in numbers. I'm not even talking percentage gains. I'm talking about actual price movement. We've never seen this. This is the greatest bull market that we have ever seen in terms of numbers, because I don't remember this number of stocks in the 500s, 600s, even the thousands ever before. In any of the bull markets, and I've been through a lot of bull markets. So this was one of those spectacular ones. The monthly chart is sitting on the 9-period moving average, so let's skip that because the MACD is turning down. It has a cross negative. Relative strength is poor. On-balance volume saying be very careful. And the stochastic is way lower than it was before, but still at 82% in the monthly. The weekly is the one that I've had this on my eye as a short for a while, but I haven't actually gone short in it because it has these quick moves to the upside and then slow moves to the downside. So the monthly went to a peak E, and now it's in trough D, making an arch formation. I'll show that arch formation from my CD just now. And the weekly chart, the daily chart is perfect because it's got the H pattern. How it holds the 260 area is going to be very important. I think this is going much lower, and then I'm going to speak to you about your position and what we'll be looking at. I'll be back with Mohammed and Peter straight after these messages. Dow is now down 48.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Basil Chapman. We are back, and the Dow is down just under 60,400. I'm really watching that closely. S&P's down 445. Hey, day's young. A lot of selling pressure could come in by the close. We'll see. So we're with Mohammed in Glendale. We're looking at REGN, Regeneron Pharmaceuticals, trading at 266, down $1.48. Now, let me ask you your position. You have what?
Yeah, actually I went long yesterday just for a quick trade, but I got trapped. I went in at 271, but it started to drift lower.
So are you still in the position? Are you still in the position?
Yeah, I still got the position. And
okay, let me just quickly talk to this because today's Technical Friday. Number one, if you went in for a quick trade, your thinking was not necessarily price or percentage, but that there'd be a real quick pop-up of at least 3 to 4 points, and you would just deal with it as it was moving up, and that would be great because it would be a 1.5%, maybe 2%, and it could even be more. And if it even broke above the previous high of 277.83, this could be a successful bounce. So what happened is It did exactly the opposite. You got the exact opposite. Instead of the gain of 4 or 5 points that you were going to deal with, you're now taking a bit of a loss. I'm going to make the suggestion. Now, you don't have to do this right away. Think it through. You do not want to get stuck into this stock. Look, the low, you've already sat through a low of 262. That's even more than you expected. So you've got to bounce back of 4 points. I'm going to make the suggestion that, let me base this on the, that there could be a higher price, but I would tighten that stop up right now. I'd make a number, 265.48 or whatever it is. You take a number and you stick with that number. Be very disciplined because it was supposed to be a short-term trade. I'll explain why. If this thing breaks and closes by Monday, closes under today's low of 262.97, the low of 257.69 looms from the 18th of December in the H pattern. I haven't got time to show now. I'll do it real quickly. The dreaded H pattern, which is the Chapter 17. I should know that right now. Chapter 17 right there. You know what? I don't even have to tell you. You know what it looks like. It keeps coming down. So be careful, especially in this market right now. I wouldn't play games. I tighten up stop at least in a position. The weekly chart looks like it's going to break down. It's a Roman candle from a couple of weeks ago, and the monthly is on the verge of breaking. I would love to see a bounce to the upside. Don't take a bigger hit than you should. You can always get back in because it has a very successful test of the 259 to 257 level and bounces. That's the bounce you might want to play. Hope that helps you, Mohammed.
Yes, it does. Thank you so much, Basil.
Okay, thank you. Just be very disciplined. Don't turn a short-term trade to a long-term position. Let's go to Peter in Melbourne. I was in Australia. Melbourne, Florida. Hi, Peter. How are you?
I'm doing well, Basil. How are you?
Good. You're looking at GE?
Yes. By the way, great show. And we talked about 5 days ago regarding...
And I said, be careful. Don't touch, right?
That's right.
Now what I'm going to say is I use General Motors for my subscribers for years now as a kind of an indicator. It's just one of many indicators, but it's an indicator that says, hey, if GE starts to turn down before the market, watch out, because very often the market turns down. If it goes up before the market, watch out, because that could be a foreteller. I think GE is telling us something. GE's acting very poorly. We're out of GE now. I have no intention of going back to GE until I see how the whole 26s, maybe the 25s, base out. If it forms a base next week, that'll be a good thing. But if it keeps coming down, I'm saying to you, stay away for now. On Tuesday or Wednesday, I'll look at it again, okay?
Great. I appreciate it very much. Thank you.
Thank you so much for calling. Thank you for the compliment. Amber, just as we go out for one of our listeners, Amber, don't touch Amber. It's breaking those support levels I was looking at. I would say to you, if you've got profits, take some profits off. Let's see how 29 to 28 holds as 29.64. Folks, Basil Chapman, a Dow closed below 16,370. Not good at all. I'll be back on Monday.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.